In this video, I'm going to be going through 3 different trades that I'm going to make today in my trading account, understanding and walking you through why I'm doing them, what I think is going to happen, and the amount of cash flow I'm projected to make from each trade. Let's get in the technical analysis first, and then go and execute the actual trades inside our Interactive Brokers Trader Workstation. So starting things off, we've got Airbnb. And there's a couple of reasons here on the chart that I want to highlight for you why I'm a little bit bullish on Airbnb in the short term, heading into their earnings date there at the bottom on February 13th, so a couple of weeks away. First things first, it had a nice kick off this level right here, kind of a double bottom recently, around that 130-ish level. So that's number one. Number two, we've also got this kind of positive bullish indicator with this momentum indicator at the bottom, the RSI right there and right there, right? You can see that that second area is gone higher, which means that there's potential for a bullish divergence in the RSI right there. This happens sometimes when the RSI, there's a little bit of an oversold kind of area where it's going to start trending upwards like this. But if you look up here in the stock, in the actual price, the stock's not reflecting that move. It's kind of going flat right there between those two kind of areas where the momentum is changing, but the stock price isn't. So in my mind, there's a little bit more momentum behind this stock right now that seems to be showing. So I think that's a good move for it to potentially move higher, but we're also going to protect our downside on this one to make sure that if we're wrong, we're not going to be left holding the bag with a whole bunch of shares. Now, normally my playbook here would be to look at selling a put long-term on Airbnb. You can see my chart setup is the selling put setup here in TradingView. And this is the same setup that I use for selling puts, but I also use it for settling credit spreads and doing some kind of spread trading. And that's what we're going to do today on Airbnb. We're going to set up a credit spread, and we're going to target this area down here. Normally the Bollinger Bands are where I like to kind of hang out and sit. We're going to look a little bit below that just in case there's some negative kind of run up into earnings. I don't think there will be, but just in case there's a little bit of a sell-off in the market, we're going to kind of give it a little bit of buffer room. So 130 down to this Bollinger Band there at 127. We're going to look around 125-ish and change. So that's going to be our first kind of key level right there. If I draw that in, it's going to be around there, 128, 127, a little bit lower. Give ourselves a little bit of buffer on the downside. And then we're going to target a lower put option down below that to buy, probably about $5 away, maybe around 120 to get in there. And that's going to be our playbook on this trade. Let's see what kind of action we can get. And I'm going to hopefully get this in and squeak it in before this key earnings date down here so that I can get it, kind of close it off right around here a few days before earnings date. So I'm not going to actually go in and have to hold this position through earnings. That's my optimal way for this trade to work out. Let's hop over to Interactive Brokers and see what it looks like. So here in Trader Workstation, we're in our options chain for Airbnb. We're going to click on Strategy Builder to get this kind of area ready to go for our credit spread. And we're going to target 125 and 120 and see if it's worth the squeeze and taking on the risk of opening up this trade. You can always do your technical analysis first, but if the numbers in here don't make sense, then you may not want to proceed if you're not getting enough bang for your buck. Earnings date again is the 13th right there. So let's go out just before that. Let's try to see what the February 9th has in play here. And we'll look at the put side, and we'll look down here, 125. Not a lot of juice at 125, but let's see if we sell this leg, right? And we go up here to 120 and sell that leg. We've got our bull put credit spread right now and be making roughly 26 bucks. I mean, is that enough for the margin impact that we're going to have and enough for the risk that we're taking on? Probably not in this scenario. If we go back and just clear this out, and we'll go out one more week. Let's look at the IV right there, 32.8. The volatility is going to jump when we go into the earnings week for Airbnb, 41%, okay? And you can see here that the potential return also jumps up. We just highlight this again, 125 and 120. Now, instead of making like 27 bucks, we're up to 62, so almost 3 times the return. Now the question is, do I believe that this is going to be a stock that's going to move a lot before earnings or not? If we just flip back into our technical analysis on our chart right now, then you have the option to kind of dig in a little bit more and say, hey, where is this stock likely to go in the next little bit? We did have some strong candle balances right there off this kind of area where it hit before. We have another one here Friday kind of finishing off. Do we have pretty good volume in there? 2.418 million, not a crazy amount of volume though. And then we just have to kind of make our decision to make our play based on this. I like the RSI moving upwards. I like the stock kind of candlesticks moving up. It may kind of hit this area at 140-ish and kind of bust back down, but it also has some recent examples of carrying through that level. It hasn't really stopped out there too much. It has recently here, but we were going to take an educated guess on this one and say that's going to continue on. But my goal on this trade is to not carry this position through earnings. So I'm hoping the stock will continue to rise into next week, the week after, If it does pull back, I will look at defending my position, potentially closing early and taking a quick capital loss to do so. But I'm going to go ahead and execute this trade right now and get this in the hopper. So we're going to just go mid again right there, make sure that's the same. And then we're going to submit the order. And you can see that now down here, we have our trade in our order section, our bull put spread on Airbnb. On to trade number 2. Moving on to Disney. Disney has been on a bit of a wild kind of back and forth the last couple of days, a little bit of a whipsaw. But overall, the one kind of key metric I like here going into earnings again on the 24th is that we have a golden cross in terms of the stock price and the moving averages in here. We have a stock price that is now tipped, and kind of today it bounced off of that 50-day moving average, which is that yellow line right there. And this golden cross is defined as when the 50-day moving average, which you can see right here, right? I'm going to just brush along it. This little moving average is crossed up and above this red moving average, which is the 200-day moving average. That is generally a very bullish sign for the stock. And that it doesn't always happen and kind of take off right away. But for a long-term kind of move, it is a very bullish scenario, which is good to see. So I'm going to use this and expect this to be a catalyst, let's say, for some institutional money flowing into this stock. You can see it hasn't happened for a while. When it did, last time we had this kind of move, it was a long kind of period of decline. It was a quick move above, and then it kind of dropped back below for the moving average, and we kind of sunk below that ever since. But we have been building up steadily here for the past, let's call it October, November, December. That's 4 months. And now we have a little bit of a baseline here around that $89, $90 level. So we're going to use that as our kind of downside area with a little bit more buffer built in yet again. And we're going to go with a earnings date of Wednesday, February 7th. So we're even closer than Airbnb's. So what we're going to do here is target this level right here. Bollinger Band right there is 2 standard deviations away. We're going to go down, down, down. Okay. And like that's definitely an area where it's going to collect right there around that moving average, which it has kind of flirted with it, the red right there. We're going to go down a little bit beyond that. Let's get into this area right here, 86-ish. We're kind of popped off and had that gap right there, 85 on the low end. It may test that again if it starts to kind of rip lower, in my opinion. Obviously, these are just my opinions, not actual stock advice. Do your own research and TA when you're doing your trading, but I'm showing you what I'm thinking and seeing here on the charts today. It is approaching the top of the Bollinger Band. So I need to really go and see what kind of returns I can get for potentially selling a put or a credit spread on this scenario. If the juice isn't there, again, I may not take this trade on. I have to really be confident what Disney's going to do and get the direction right, which is always a little bit tricky when you are stock trading. But let's see what Interactive Brokers is saying in terms of the option premiums. Flip it over to Disney. Okay. And then let's take started builder off for a sec, and let's make sure we get in within our earnings date. We have 23% volatility if that goes up, which it did, 35. That's our earnings week right there. You can see that if it goes down again, 32, that means that earnings is going to kind of deflate and take some of the volatility out of this stock, which is fine. Let's go February 2nd and see what we can do there on the 85 area. Almost nothing in terms of the bid-ask spread, okay? Up to 90, we're up, and now we're getting somewhere. If we went 90 to 85, we're raking in about $50 in premium. Do I really want to own the stock or potentially have this trade kind of go south if it gets around the $90 mark? Not really. So for me, this one's probably going to be a no trade right now. I just saw this on the chart, so I thought I'd take a look and see, but I don't really want to move my kind of my put there for my credit spread up to 90 right now. I'm going to leave this one off the board for now and just go on to some other opportunities, and we'll see what else is cooking out there. That takes us all the way down here, and we're going to go down to Zoom right now. And Zoom's going to be an interesting one. Okay, Zoom's going to be interesting because it's been pretty much range bound this last little bit, going back to right about here. Let's go down this area, call it $60 per share. Okay, and let's go up here to this range, and we're going to top it around $75 per share. So for the past, let's say April 2023, almost a calendar year, Zoom's been pretty range bound between these kind of ping pong areas of 60 and 75, 76. So if that's going to hold true now, even with a strong move with earnings, it still hasn't busted through these levels. As you can see, it's been earnings 3 times and it still hasn't kind of cracked through and built up that momentum to get outside this range. I'm guessing that's going to be the same thing that go into here for Zoom moving forward. I do see some positive signs on the chart right now. We've got some support building at the $66 area. We've got a golden cross on the moving averages as well. And we have some Again, RSI, positive bullish divergence on the RSI, again, with the stock price being almost the same, but the RSI increasing here to move forward in time, which is a good sign for the stock. So my bias here would be to move this a little bit higher in terms of what I'm going to look to do for an iron condor. I'm going to have the upper end of the iron condor be right at that 75 level. I'm going to move this bottom line up a little bit higher though, just because I think it is going to trend a little bit more bullish. And I'm going to go up to around here, the $60 mark. And we're going to get a little bit more juice, hopefully, there at the $60 mark versus the $58 or $55 mark when we go and look at interactive brokers. So to do this iron condor trade, again, remember, we're going to have to sell a put right around the $60 mark, then buy a put lower. We're also going to have to sell a call and buy a call at a higher strike price as well to set this one up. Let's see how it looks like inside interactive brokers. So just a reminder, Zoom's earning date is February, looks like 27th here. So we have some time to go out and make this trade work for us. If we want to go out, usually I like to target the third trading day, the third Friday of that month, that trading month, because there's just more volume and more option activity on those trading days. And we can do that with this one because the earnings date is beyond that. And if we go out 1 or 2 more weeks, I think it's 2 weeks here, the earnings IV is going to pop right there, March 1st. Yeah, it's going to really pop on March 1st. So we could even go out to February 23rd and go 35 days out if we need to get the kind of premium that we're looking for. But let's go back and let's just go into the third Friday of February, 16th. And now let's go and look at to build our option iron condor trade here. So if we turn strategy builder on, boom, and we're looking again at that $60 level. Okay, not a whole lot of premium there, but let's just do $60 right there. Start with that. Sell 60, buy 55, right? To do that. And then on the option side on the top end, remember we said we have that $75 area as our sweet spot. So if we wanted to go in and then sell that and then buy the 80, now we've got our iron condor set up here. And if I just pull this up a little bit higher, we can see that there's a pretty big spread in terms of the bid ask in there. We're at around 65 cents right there for a margin impact, again, of $675. Not a bad return for that amount of margin being used in your account. But let's go ahead and just get a little bit more tad aggressive here on the downside with this $60 strike price here. If we bump that up to 65 right now, again, because I think that it's going to be a bullish kind of move up. 65, if we flip back to our trading chart, 65 is going to take us right up here to this Bollinger Band right there. And I'm going to get a little bit more aggressive on this one because I am a little bit more confident that this stock is going to rip a little bit higher. And just, you have to be able to manage your risk when you're trading. I'm not guaranteed to be right in the direction of this trade. I'm not guaranteed to be wrong. I have my assumptions in play here again. So I'm going to go up to 65 and just move this area up right here, knowing that if it does kind of rip back down lower into next week, I will have to adjust my trade and potentially close out my bottom leg at a loss, and my top leg I could keep on for longer, or vice versa, depending on how the stock moves, or just let the thing sit if the stock doesn't move at all and theta decay do its thing. So to do that inside interactive brokers, I could go in here and just move these and drag these around, right? Or if I didn't want to do that, I could also just go into my area here in my strategy builder, and I find this is the easier way for me to do it. If I just scroll this up, I know that I'm selling the $60 put. I can just go, let's sell the $65 put instead. And let's also move our strike price up from 55 to 60 for the put that I'm buying. And it's not going to update in here, which is kind of weird that I'm looking at this right now. And it's not even closing in and telling me that this is an iron condor right now, which is kind of weird as well. And it's giving me no bid or ask. So maybe what I did is absolutely the wrong way to do it. Let's just take those legs off right now and see if they come back when I build this back in by hand. Again, sell 65, buy 60. Our iron condor is back. Everybody's happy right now. We're good. So what are we going to do here? We're going to go in. We're going to look at our bid ask again. We have a little bit more of a return right now. Our credit is actually a little bit tighter in the range right there, which is also just governed by the bid ask spread between these options right there. You can see the big spread for 55, the $2 and the 18 cents, which led to kind of a bigger spread down for my iron condor. This one here is pretty tight. This is pretty tight. 99, 96, 26. So it's pretty close across the board, 3 cents difference. That works for me. We've got good volume in here for all these positions as well. And now I'm going to go in and just say credit. Let's go again. Let's go in the mid, $1.18. And we're going to submit this order and get this in the hopper as well. And this is one thing to note, that if you're doing these kind of combination credit spreads, Sometimes these orders aren't going to get filled right away. You just have to be patient with your trading and don't kind of chase trades, as they say. If you're always updating your order entry area and you're chasing the trade just to get it filled, sometimes they get away from you and you end up getting into a trade when you really shouldn't have. You should have just waited for your position to either get in or you don't make the trade. Don't chase trades in here. I can move this up, move this down if I wanted to. I'm just going to leave it at 65. I'm gonna leave this at 118. I'm not gonna go ahead and try to chase little margins like that. If it gets filled, it gets filled. If it doesn't, it doesn't. I'm not gonna play that game and get too emotional in the trading to get there. I've been through that before, been burned by it before, not gonna go there again. As these trades mature over the next couple days or even weeks, I will give you an update video seeing how the positions have moved and then just recapping what I have done, how I've managed things, where I'm at, if I'm going to lock in some profit, protect my downside loss, use things like stop losses, take profits. Those things will all be in a different video for these positions as we move through time. Hope you got some value to this one here today. And if you want to know more about just basic options, how they work, how they're structured, how you guys, a beginner, can get a better feel for options trading as a generalist, make sure you check out my course that's available to you now at a 50% discount to start off the new year at www.tradingoptionsdaily.com/options academy. I'll put the link in the description for you. Thank you so much again for watching this video, and I'll catch you on the next one.